Video 2 of 2 on 1013. Breakout from 74, and as a trader, you just want to buy the dip into 77-ish or lower. I don't know if you'll get a 72 entry, but as an investor, not for me up here. I think the stock price trajectory does not match the trajectory of the P&L. It's not a bad P&L. It's just this looks better than NVIDIA, and it's definitely not NVIDIA. So not for me at this place. ELF, I could invest in it for the long term. If I bought the dip here as an investment and I only took half of a position, I wouldn't engage with the second half until it goes to below 70. So I do like it. Look, I have a trade ready and I haven't launched it. I would sell puts to own shares for sure as an investment. The only thing that scares me is that the stock has traveled so much. So I don't know how this will behave in a market crash. So, which is why I say half of a position, so you can double that when it crashes. FCX, most definitely not an obvious point of entry. Anybody that bought it at 52, I don't know what to say. The closer to 46, the better as far as support is concerned. And the P&L is not bad. The company is well known and respected. So it's all about, also, you have to see what the dollar is doing. It influences prices of commodities, and you can see the breakout from these white lines. They went below them. So my take is that they're still struggling to hold them. So anything can happen. From an investment perspective, I don't start a lot here. From a trading perspective, if they take out 53, they could set a new high above this one. FDX bought the dip, I believe, right? Or is it UPS? Okay. I don't trade FDX anymore. It took the downside target, and it could be drawing the party hat, which is what? It has support and backup support. So the support is around 255 and backup support around 245, and then backup support around 230. So I would be in a buy the dip mode. If I were you, not if I were you, what I would do for me, I would put an alert somewhere below 240. And if it gets there, I'll be interested in going long. Up here, not for me. I know it's got a mountain to climb, and I don't think there's enough business to do that. And so that makes the lower scenario more popular than the upside scenario. So I bet you there's a potential of if the market corrects. I keep saying that because there's got to be a correction around the corner somewhere, right, in the next 6 months. If there is, this might have a much better entry point for an investor. FNV. Oh yeah, yeah. Not for I would. What is this P&L? Can someone explain to me what this is? So not for me. It's stuck in the middle of a range, even for traders. You have sellers above, buyers below. I think 126, 127 is difficult. 128 should be a wall, just like it has a lot of support. If you lose 117 for whatever reason, you're in danger of losing 113. And if you do that, then the entry point will be like 108, 110. FXI, I told you I'm short. I'm staying short. We'll see what happens. The amount of QE that they announced is shocking. Back to back to back, and then they waited a few days, another bunch. Boom. What else are they going to do? Everything is free. What else are they going to do? So we'll see what happens. This is a very suspect chart. We'll see. I'm holding a put, and the put, I sold puts against it. So now I'm holding a put that cost me about $108, $105, and it's worth 170 or 50 or something like that. The original entry price was 175, but I sold two, and this is the third set of puts. So I would have had almost half of it paid for by the end of this week. Okay, GDX, not an obvious entry point. You're going into a prior fail. Now gold's on a tear. GDX is not gold. GDX is companies that benefit from gold prices. If the market's correct, this will follow the market, not the gold. So from a trading perspective, this stock has prior fails, which are triggers, and then backup prior fails, which are triggers as well. So you do have resistance, two of them, and they're both catalysts, versus must hold support in order to avoid 36. So sellers and buyers, above and below. Yeah, above and below. They broke out of the resistance and now they're coming back to test it. This is another conundrum. How is this stock moving like Tesla when this P&L is like this? You tell me on what planet the SEC does not investigate price manipulation of a stock when it looks like this and the P&L is like this. You just, someone explain that to me, please. When this happens, I walk away from these charts. I just don't trade them. There is no way on planet Earth this stock should be looking like this, when that means that there is a market maker that's manipulating the prices and they're about to screw you at every corner. So you either trade the big picture, which is bearish on this one, down to 66 or 67. So you might get a bounce, fade the bounce, because they're probably hunting 66 or 67 over the next few weeks. And so there will probably be a bounce towards 73. Exit if you're long from a trading perspective. Investment-wise, enjoy it. It's a good company for the long term. This is not a good company for the long term. I wouldn't trust any car company. None. I think they have the weakest managers on the planet. Nobody's made bigger mistakes than the airlines in my book. So up here, there's a cluster of sellers that is huge. I would not touch the stock up here. Nothing. Buy the dip if you want to. Sell puts to own shares if you want to. I would not own calls at all. Google. I wouldn't own Tesla up here. Yeah, somebody's asked me. I said car companies. I would not own Tesla up here. He just told us they're a car company for another 2 years. For that, it's too expensive. It should be much lower. We're not talking, probably Tesla is later. GOGL, I would ditch it. I will no longer invest in Google. I'm all a fan. I'm all intertwined in its ecosystem. But it's underperforming the market. So why should I bother with it? It's not like it's going to have a super spike, because anyway, it might. For that, 170 needs to happen quickly, and then you have to deal with 175, the letter R on the upper left, the white. So you do have a lot of buyers. You better hold 145, 147. If you don't, I think it's going to 136. Meanwhile, in order to get up to the upper end of the earnings reaction from April, it's going to need a miracle. And if so, it's a short up there. I have to make a comment. So I subscribe to three different AI models just to test them out. Okay, this is a new thing, so I'm spending a couple $100 a month investing in stuff like that. And I've cut down my Google searches to nothing. The only time I go there now is for me to get like flight informations. Like if I wanted to, Google flights or Google Maps. I don't go there and query for facts anymore. First of all, it's diluted. They tell me it's not correct, and I agree. So if I wanted to know what happened to this and what's the answer to that, now I go to my AI search engines and I pop in there and I say, tell me what this is all about. So how will that affect their business? We shall see. It might be a long-term thing, but put it on your radar. It's a beast. Financials are great. The business is good. I'm all in. If they charge you money a month, I will probably pay it until I figure out how to get out of that. Humana, okay. So let's deal with this. So we went long via credit put spread. The credit put spread got demolished on a headline. We only had a 1 day heads up to exit for 50% of max gains, but now max losses, and now it's a max loss. So now the situation becomes dire. So if I have the credit put spread for this week, I should close it or roll out of it, because I will be assigned something. Multiple ways of handling this. I've mentioned it before. I've sent out a write-up, but I'll mention it again. Okay. So if I sold a put at 290 and I bought a put at 285, my maximum loss is the difference between that and what I collected. So let's say $430. I'm using round numbers, is my maximum loss. So if I did one, that's all I lose. And in order to take that, I would just pay the $5 and leave it. Other people have chosen to take the shares. So those are people who know what they're doing and have a large account, because you would need to buy 100 shares at 290. you would make a lot of money from the 280 put that you own. You sell it for profit, and your break-even point will be not too far from where the price is now. But now you're stuck holding 100 shares. And if you have a small account, you don't have that opportunity. They won't let you do that. So, but if somebody has a large account, they can get out of this with very, very minimal damage. In fact, 2 people did it down here, and they're super profitable now because the stock has rallied. So they sold the protection, made a lot of money down here, and now this rally back made the loss from this one a lot smaller than what they profited from the other one. So complicated way. So 1, close it and accept the loss. 2, take the shares, sell cover calls, or sell the shares and profit from the protection leg. Very limited people can do that. 3, roll it. So move the position out 1 or 2 or 3 weeks. You'll pay a little bit of money, and hopefully this one spikes on earnings and bails us out. I had only 1 contract, so I will probably roll it one time and see what the hell happens. But I have no problems taking the $430 loss. It was not my ticker. I hate it, and it's back on my hate list. And not to not trade biotech and healthcare. That was my rule. I broke my rule because somebody asked about it. So healthcare and biotechs, they have this element of surprise at any point in time. Hopefully that helps. IDXX. Good P&L, good solid support. It should hold 450. If it does, then you could chip away at the resistance, but I don't think it's going to get out of 505. That blue box looks like a pretty tough place to get out of. So it's a hold. Intuit, okay. Good P&L. A lot of buyers at 590 and 560. They proved it multiple times. But I bet you there's going to be a lot of sellers at 650. How are you going to get out of that? So maybe the stock splits and it gains a few buyers from that silliness. And it better hold 560. That's all I got to do. And I should say. There's no reason to see it lose that, but it better hold it. And JP Morgan. If I wasn't short, I would short it on the spike. The P&L was great. It's nothing against them. So I'm just shorting the price action. I've shorted it before. The move, it's rare that the banks move this much on earnings. They did it here. Look at it. And then they collapsed. So I'm not saying it's going to collapse again. I'm just saying the report was awesome. But if you sliced it and diced it, it says some bad things about the economy or warning signs. So read it. I'll put you on the right path. What I saw. See if you can prove me wrong and come back and let's debate it. I would love that. That would be helpful. And what I saw is that they increased the holy crap money about the economy. They 125% increase in I think loan loss reserve this quarter versus last year this quarter. So why is that? Was it low last year, or now they see the odds of people skipping on their bills? And maybe that's why the Fed is so eager to cut rates, because they've had conversations with JP Morgan and maybe they said, hey, we're starting to see some metrics that are indicative of, some weakening consumer. And also all of their upside, like they beat by whatever percent, came not from the consumer side, it came from investments. So the economy, the consumer spending, which is 2/3 of our economy in the US, there might be signs of negative things into that from the JP Morgan. As a trade, I shared the short, which is a very simple, harmless short. KNSL, unfamiliar, very good P&L looking thing. I don't know the business, but it looks like a stable business. Why is the stock look like this? So that's me. When I see a chart that looks this violent, as I said for GIS, I don't trade it. Look at this P&L, look at the start. That tells me that the market maker that controls this is whipsawing the price action to screw us retail traders. As an investment, please buy the dip and hold it as an investment. Don't try to trade it. If it loses 440, it goes to below 400. If it takes out 500, it probably retests that high. I'm still short. I need to take it off. The only reason I'm short, like from a short-term perspective, this has a lot of support. I think it goes to 65. This red W says it goes to 65 and change and 60 and change. Target 1 is 65. So I caught a naked put on this one, and I'm not letting it go. I think I sold one put against it. I can't remember. So it's in great shape, up 100%. I have no reasons to close it. If I had 10 or 20, I would cut it down. So trim accordingly. Make the size make sense for your account. If you had 3 or 4, why not ditch 4, 3, and leave 1 or 1 running if you had 4 or 3 or 2. Lows, okay, clearly not an obvious point of entry. I would look to buy dips anywhere at or below 245. LS Lattice, okay. P&L, alarming. This is like the old Micron. On an annual basis, it looks fine. And then you go to the quarterly basis and it's trending down. That's 5 of them. So what's going on? Make sure you can answer that one. Meanwhile, the chart shows support at 44 or lower. So it's not like alarm bells going off at super high prices. I like 42, 40. If you lose that, you probably go to the low 30s, and that would be excellent. I'm going to put an alert there. I say excellent. I don't know the business, so might be a dying business. So make sure you know the business. Anything around 62 should be a lot of resistance. LULU. So I had an alert from Ulta this week. Why don't you go long on Ulta? Kind of alert. I can say the same thing here. The only thing is that it's struggling to bounce and hold when the markets are flying high. So if you get to 285, you can probably get another $20 out of it upside. I would rather buy the dip into 264, 265. If I'm lucky enough to pick it up at 250, that'd be awesome. Look at this tick. So I'll put an alert down here. So it'd be really interesting, and especially down here. I mean, one can go long, but holding naked calls might be a little challenge. McDonald's were short, as we know. We did well, I think, the starting point. I haven't looked at it, so I guess I'm still short. I'm pretty sure I said sell a call spread, buy a put, or a put spread, something like that. I would do it now if I didn't have it. This is a better exit than an entry point. Nothing against the company. Same with this one, MELI. I'll say it this way. If it doesn't take out 2160, it's probably going to go to like 1800 in the next 6 months. Don't short it, please. I'm telling you, if you're invested in it, I wouldn't add. If you're looking to invest in it, I would only take a small portion and add later. I'm not going to say sell puts because this is a $2,000 stock. To sell a put, you require a large account. Meta, I wouldn't touch it. It's definitely not a short. Please stop shorting it. Please stop shorting it. So this is a company, look at the P&L. It's freaking bulletproof. In my opinion, it's a scam, but it's bulletproof for now. And it's telling us it's going to make money out of something else that doesn't even exist. This is an untouchable stock. You either believe in it and hold it forever, or you just leave it alone. Buy the dip, buy the crash. If it falls to below 400, just jump all over it. Not for me up here. There's nothing for me I can do up here. Short term, you could be short with a tight stop. For those of you shorting it, please don't short it traditionally by selling naked calls or anything stupid like that. A put diagonal maybe would be the least intrusive one. MLR, Miller Industries. Don't know them. Are this the welding company? No. 56, strong support zone. If it gets to the 50 or lower, that'll be a nice buy. Up here, you have a lot of sellers. It's not for me. I mean, I wouldn't get rid of it, but it's not for me. It's the starting point. What is this? Oh, yeah, the same one. Look at 65. Looks like a pretty good selling point. So if it bursts to 67, I'm out if I'm long. Morgan Stanley, they have earnings this week. All the banks that didn't report last week, they're reporting this week, which makes the short on JP Morgan interesting. I wonder, for example, I bought a put on Bank of America on Friday just for giggles, just one, literally one. It was like $50, I think, for this week, which I never do, because Bank of America was up more than JP Morgan on JP Morgan's report. So how does that make sense? We'll see. I think JP Morgan has a better money-making machine, Bank of America is more of a traditional bank in my opinion, so we'll see how that plays out also on Morgan Stanley. So it'll be interesting to see how the banks hold their greens. Historically, they don't do that well. And is this an all-time high? Phew, yeah, okay, so it's definitely not for me. If you're looking to invest in it, why don't you buy the dip if it comes? Microsoft, buy the dip. If the stock market is not correcting, this thing is a freaking bargain. You heard the if, right? If the stock market is not correcting, this thing is a freaking bargain. I would comfortably sell puts to own shares. I would sell put spreads to go long. I wouldn't buy naked calls. I would buy a call spread. Now, if the market's correct, this will be lower. I'm not telling you it's not going to go lower, but it's an excellent company to build positions on weakness, especially if you use options. There's so much to be done. As a chart, it's stuck. Super strong buyers below 400. Super strong sellers above 426. Match. I wouldn't touch it up here. I wouldn't touch the whole stock anyway. Something weird about it. What is going on here? Short term, look left. There's a lot of sellers above. Not for me. But if you were to twist my arm, I'd say maybe I'd be interested at 35 or lower. Micron. After it doing its thing with me, it gave me my price. It gave me the dip. And if you bought it on the dip, kudos. Just stay in it. If you want a real spike, see it go above 115. I don't think it's doable, but if it goes above 115, it probably goes to 130. And it's shortable up there from a stock perspective. Yes, it's doing great the last 3 quarters. It has done great 3 quarters before. So let's see how this plays out. Bullish chart, higher lows attacking a neckline. You should know your timing though. Like if it dips back to 102 or 100 or 99, that would be a great entry point. Netflix, just leave it. It's a great company. Don't short it because you hate it. The P&L looks great. Earnings in 4 days. I wouldn't touch it into the earnings. Buy the dip if it happens. Nike, own it for the long term. If you want stock 1 of 2, like if you want to own 100 shares, just buy half. Okay. We'll see what happens. Some challenges in Nike at 105. They're getting bad press because of Caitlin Clark, but every time they get bad press, they recover well. Read about it. It's pretty interesting. I love what she did. Leave everything. I said she should do that, by the way. Side conversation. We got to talk about it. I said it. I never for once thought she would do it. I said if I was her, I would drop the keys and leave. And she did. Okay, bye. You don't want me here. I won't be here. Bye. Whoo, power move. Anyway, Nike will survive. It survived worse. Now, ServiceNow is a bear. This is a bearish chart down to like 912, 916, or 900. So buy the dip. Up here, I wouldn't have guts to allocate too much for the upside. I wouldn't show it, but I would be ready to buy the dip. I don't know what this is. It's going into a prior fail. They're going to try to push to 72.5. We'll see if they can. And if they can, what about this? So the closer you get to 74, the worse it is of an entry spot. Buy the dip if you want to, and it better hold 66.5. NetApp, not an obvious entry point. I think you have a strong seller at 129, 129.5. So the closer you get to that, the less likely you're going to get some short-term upside. Buy the dip, yes, into the whole zone down to 112. And you better hold 112, because if you don't, you're going to lose 100. NUGT. Who is this? Direction, Daily Gold Miners, GDX. So you can see here how it looks inviting to take that and a higher high, because that's what they do. They dip and they make a higher high. They dip and they make a higher high. Dip, higher high. Dip. So if you're holding it for that higher high, I can't fault you. If you're looking to buy the dip if you can. The closer to 48, the better. Maybe 47. And don't lose 46. If you lose 46 and you come down to 43, not the end of the world, but it would make a change in behavior. And that is video 2 of 3.